Very good morning, everyone. How are you all? Everyone fine? Now, last class we completed AS 15. Any doubt in that? Have you done the revision? Have you understood define, benefit, obligation, plan, asset, all the points? I think simple only from exam point of view. Few questions. They will not ask complicated question, don't worry. If they will ask that much question, is simple only. Correct? Now, come to a next accounting standard AS 27. AS 27 is related to financial reporting of what? Of joint venture. Of joint venture. Financial reporting of interest in joint venture. Correct? So what is the meaning of joint venture? We need to understand. Can I say in AS 21 we have done consolidation of subsidiary. Correct? Now first we need to understand what actually joint venture means. Correct? So what is the meaning of joint venture? Joint venture is a contractual agreement. Is a contractual agreement. Understood? So joint venture is a contractual agreement whereby two or more than two party undertake an economic activity. Where two or more than two party undertake an economic activity which is subject to a joint control. Which is subject to a joint control. In this case, it is as simple as if I say partnership is also a joint venture. Because partnership is also what carried by two or more than 2% to undertake an economic activities, and both the partners have what? Joint control over that business. Joint control over that business means, if I say in this way, when I say AS 21, in AS 21 what happened? Suppose A, B has created one company AB Limited. So in this, A has control and B has no control. So in this, A will prepare, A become parent company and AB Limited become subsidiary. But both A and B are investor. Means if I say A and B are investor or not, both A and B invested where? In the equity shares of AB Limited. But A has control, but B does not have any control. And can I say for this actually no contractual agreement is required, and among A and B there is no contractual agreement. You can see under with A and B there is no contractual agreement. So this is what AS 21. Now we came to AS 27. So AS 27 says that A and B, if suppose there are two parties which undertake an economic activities, means in the name of suppose AB Limited, so both have joint control and both are under what? A contractual agreement. Both are under contractual agreement. Understood? Means it is quite possible it may be 60%, 40%, or it may be 30%, 70%, whatever. But can I say it become a joint venture? It become a joint venture. Got this point? So what are the two element which is required for the definition of joint venture? One is contractual agreement, other is joint control. Got this point? So once again, a joint venture is a contractual agreement whereby two or more than two party, means more than two party may have also joint control. Means I can say in this way, suppose A, B, C, D has created one company A, B, C, D. In this, A, B, C has done one contractual agreement. Understood? All three will have what? Joint control. All three will have joint control. So this is also what? A joint venture. So ABCD is joint venture. ABCD is a joint venture. Understood? So now we are understanding in this chapter what is the financial reporting of interest in joint venture. Financial reporting of interest in joint venture in the financial statement of which company? Investor. In the financial statement of investor. In the financial statement of investor, na? This investor will be known as what? Joint venturer. We will call them joint venturer. So in this chapter we are trying to understand what will be the accounting treatment in the books of joint venturer for their interest in what? Joint venture. As simple as what we have done in AS21. In AS21 we have prepared the books of A Limited or AB Limited. A Limited, that was known as consolidated financial statement. So in the books of A Limited we have accounted what? The transaction of AB Limited. So that only we have done na. Understood this point? आगे चले? Yes sir. So what we have understood till now, only definition we have understood. So can you repeat with me? A joint venture is a contractual agreement among two or more than two parties to undertake an economic activity which is subject to joint control. So what is joint control? So joint control is a contractually agreed sharing of control. Contractually agreed sharing of control. So can you see, if there is no contractual agreement, there is no joint venture. So contractual agreement is must. Contractual agreement is must. Means if I say in this way, the ABCD have created one company ABCD, but there is no contractual agreement among ABCD. So whether it is a joint venture, then it is not a joint venture. So what is required? First, contractual agreement is required. Contractual agreement is required for joint control. So joint control is a contractually agreed sharing of control over an economic activity. Understood? So what is the meaning of control? So control means power to govern, power to take any decision, governing power. So can you see, if I have a governing power, so it means I have a control over this entity. So in my academy I have the governing power. So it means I have a control over the entity. Yes or no? So control is the power to govern. Power to govern what? The financial and operating policies of an economic activity so as to obtain benefit from it. So as to obtain means so as to generate profit. Benefit means what? So as to generate profit only. Correct? Yes sir. So control is what? Power to, bolo? Control means power to govern what? The financial and operating policy of a economic activity so as to derive benefit from it. So as to derive benefit from it. So you have understood joint control. You have understood control also. Correct. Now what is the contractual agreement? Contractual agreement means contract. Contract, do you know what I will say? Contract can be oral, written, expressed, implied. But normally in this case, can I say a written agreement is required? Written agreement is required, but it does not mean it cannot be oral. It can be oral also. So relationship between venturer means investor. Venturer means what? Investor, na? Is governed by the contractual agreement. The terms and conditions you have done in partnership act, partnership agreement. All the terms and conditions are written where? In the agreement only. So if you are carrying some economic activity, so of course there will be some agreement. Agreement will define the terms and conditions, who will contribute how much, what will be the profit sharing ratio. All these terms will be defined there. The agreement can be in the form of written and signed agreement or as a minute of venture making or in any other written form. So normally it should be in written form. Normally it should be written form. Correct. The contractual arrangement establish joint control over the joint venture. So this contractual arrangement will establish joint control over what? The joint venture. Understood? So because of that contractual agreement there will be some joint control. This point have you understood? Such an arrangement ensures that no single venturer is in a position to take decision by their own. Means no single venturer is in a position to unilaterally control the activities. So one single investor cannot control the activity. Then to it become what? Parent company. Then to AS21 is applicable. then to AS21 is applicable. Understood this much? Means, can I say if there is no contractual agreement, non-existence of contractual agreement will disqualify an organization to be covered under AS27? So if there is no contractual agreement, AS27 is not applicable. If there is no contractual agreement, AS27 is not applicable. Correct? Understood. Now just try to understand what I am saying. What I am saying is, suppose A, B, if A is holding 60% and B is holding 40%, and this is AB Limited, and there is no contractual agreement. There is no contractual agreement. Are you able to understand? Which AS will be applicable? AS21 in the books of? So can I say in the books of A, AS21 is applicable. In the books of B, AS21, AS27 both are not applicable. AS23 is coming soon. AS23 is coming soon. So of course that when we will do AS23, I will say in the books of B what is applicable? AS23 is applicable. But right now I am not discussing about that. Right now. So this AB Limited is a subsidiary of what? A Limited. I think this you have understood. You write down now. Why you don't write? You can retain everything. You are Paramatma. However, I am uploading all this in the Google Drive. You have seen? This all PDF notes will be uploaded, but you should maintain your own notes, na? This you have understood? Correct. Now, second. Example number 2, if I say A, B, C, correct now? If I say 40%, 20%, 40%, they have what? In ABC Limited. ABC Limited. And all are under what? Contractually agreement. Contractual agreement. Contractual agreement of what? Joint control. Very good. So they will jointly control. JC means what? Joint control. So this ABC Limited become joint venture of what? A, B and C. So in the books of ABC, which are known as joint venturer. So in the books of joint venture, what will be applicable now? AS27 will be applicable. Are you able to understand? Have you understood this? Can we proceed? But one doubt will come. Doubt is what? Example number 3. Example number 3. A, B. Now suppose A is having 60%, B is having 40%. Correct? Are you getting what I am saying? And this become AB Limited. And they are under contractual agreement. Oh, अच्छा, ये बात. Contractual agreement. Now one doubt will come. A has control or joint control? Are you getting? Now one doubt will come. Now if you see AS21 says that if any entity has more than 50% of paid up share capital, then it has control. And then for A Limited, what is applicable? AS21 is applicable. But they are under contractual agreement, so they have joint control. So now the doubt will come in the books of A. What is applicable? AS21 is applicable, okay, AS27 is applicable. One doubt will come now. Are you able to understand? So can I say one justification has been given for A, AS21 is applicable because AS21 that control definition will override this. Because they are having a more than what? More than 50%. And for B, AS27 will be applicable. So this is a point. Understood? Correct. Even though they have under contractual agreement. So that control definition given in the AS21 will override this requirement, because A is having more than 50%. So can I say AB Limited becomes subsidiary of A, and AB Limited is a joint venture of? However, that is not correct. It is not correct. When we come to CA final, I will say in the books of AB, it is joint venture only. It is not. That is not correct, because can I say A does not control? A is having joint control, but then also as per the meaning given, if you just go to the act, so we'll read the act and we'll try to interpret that. So as per the interpretation of act, joint venture with contractual agreement will be excluded from the scope of AS27 only if the investment qualify as subsidiary under AS21. In this case, it will be covered by AS21. Understood? This point have you understood? So even though there is a contractual agreement, as per the meaning given in the Companies Act, it will meet the definition of control, and therefore AS21 will be applicable. However, it is not correct now, because it does not have control. It has what? Joint control. So can I say in correct terms, it should be AS27, it should not be AS21, but we will go by the interpretation of an act. Chalega? Yes, sir. So we will not fight for this. From my point of view, that type of question will not be asked in exam. Correct. Now, to understand the accounting treatment, all types of joint venture has been divided in three forms. Three forms. There are three forms of joint venture. One is known as jointly controlled operation. One is known as jointly controlled asset. One is known as jointly controlled entity. Correct. So to understand the accounting treatment, there are three forms of joint venture. Jointly controlled operation, we'll call it JCO. Jointly controlled asset, we'll call it JCA. And jointly controlled entity, we'll call it JCE. Correct. Normally when I say JCO and JCA, these are unstructured. Unstructured. Unstructured means separate entity is not created. Separate entity is not created. Understood what I am saying? Have you understood what I am saying? Not able to understand. Write down first. Write down. These are unstructured. Means separate legal entity is not created. But this JC, from the name, it is what? Structured. Structured means it is a separate legal entity. Correct. Understood? Are you able to understand? Let me take one example of JCO. Suppose you become chartered accountant. You came to me. Of course, you will become chartered accountant. You came to me, sir, you teach only accounts, but I can teach all the other subject of foundation. Sir, I can teach mathematics, law and economics. Achha. Correct, na? These are the three subjects, na? Oh, you all came to me. He said, you teach account, will teach all other subjects. Let us create one JCO. Let us create a JCO. Okay. So can I say, we'll start teaching CA foundation student without creating any entity, na? Without creating any entity. Means we need to only teach, na? So what I will do, I will bring some asset and I will say you bring some asset. I will say I have benches, so you can come and teach here, but I don't have laptop, you bring laptop. Are you getting what I am saying? I said I have whiteboard, I will bring whiteboard. Then I don't have AC, you bring AC. Correct now. So can I say jointly we can contribute some asset, and without creating any entity, can we start operation or not? Only what is required? Student is required. For that we'll do marketing. 2-3 students will come, and with my name some more students might come. You enjoy that subject, I will enjoy account subject. Quite possible or not? Yes or no? Correct. So can I say in this way we created a jointly controlled operation. So means separate entity is not required. So whenever there is no separate entity, it cannot be JCE. So jointly controlled entity means what? A separate entity is created. Means whatever example I have given right now, these all examples are for what? Jointly controlled entity. Because I said AB Limited, so a company was formed, a company was formed, a partnership firm was formed. It means it is a separate legal entity. It means it is a jointly controlled entity. So whenever separate legal entity is not created, then what will be the accounting treatment that we need to understand? That we need to understand. I hope you have understood. Similarly, suppose just try to understand. Just try to understand. Suppose you are doing one business, I am doing one business, and we require common asset. We require a common asset. We suppose we require a common truck for the transportation of what? The goods. Correct now. But truck costs 20 lakh, 30 lakh. So I said I also require truck. You also require truck. Let us purchase Let us purchase a truck jointly. Okay, the truck is a jointly controlled asset. Means I will also control you. I will also control that asset, and you will also control that asset. I will use for some hour. You will use for some hour. Or if it is given on rent, will generate income, and that income belong to both. That income belong to both. So that become jointly controlled asset. But batao, for purchasing that asset, will you create any separate entity? No, the separate entity is not required. Separate entity is not required. So what will be the accounting treatment in that case that we need to understand? Means one thing is clear that for JCO and JCE as separate legal entity is not required. So if there is no separate legal entity, okay, separate books of account is not maintained. Means can I say in that case we do not maintain separate books of joint venture. We do not maintain separate books of joint venture. Means what actually happened, just try to understand what actually happened. Means I am just giving the example of JCO is CJ sir and student sir. Student become now sir. Correct. So CJ sir and student sir join together to start CA foundation business. CA foundation business. Correct. So can I say I have my own business and you will also have some your own business? It is your own business. But CA foundation is a jointly controlled operation. So for my business I am already preparing my books of account. For your business you are already preparing your books of account. So can I say this is the books of account of CJ sir, this is the books of account of student sir? Arey bolna. Correct. My question to you all, for CA foundation business, will you maintain a separate books? Will you maintain a separate books? No. No. You will not maintain a separate books. Now suppose we for this CA foundation business we purchase one asset and that asset belong to 50:50, let us assume. So what will do? 50:50. 50 will be recorded in which books? CJ sir own book na. He separate books of this joint venture will not maintain separate books of joint venture, not required only. Are we able to understand? Suppose there is a liability and suppose liability is jointly incurred. We have taken a loan for this business. We have taken a loan for this CA foundation business. So that liability belong to both. So 50% where? 50% here. We generate income. So 50% belong to this, 50% belong to this. We incur expense. So 50% यहाँ पे, 50% यहाँ पे. So who will decide 50-50 agreement? It can be 20-80 also. It can be 60-40 also. Can you say there might be some asset which is contributed only by CJ sir? So this asset belong to whom? So this asset will come in whose balance sheet? CJ sir. Are you getting? There is one liability which is taken by you only. Correct na? Some loan you have taken for your purpose. Correct na? Suppose you don't have any fund, so you have taken loan. So you have taken loan. That loan belong to whom? Student sir. Are you getting what I am saying? So can I say understood? Have you understood? So what they want to say now, let us understand. Ki jointly controlled operation. Under this setup, venturer do not create a separate entity for their joint venture business, but they use their own resource for the purpose. Understood? Correct. Since there is no separate legal entity and venturer do not recognize the transaction separately, they do not maintain a separate set of books for joint venture. Understood? They will not maintain a separate books for joint venture. All the transactions of joint venture are recorded in their books only, in their books, in their own books. Understood? A venturer means CJ sir and student sir. Venturer, understood? Not joint venture. Venturer means investor. Venturers should recognize in their separate financial statement and consequently in their consolidated financial statement. Means from their separate financial statement, if they are also preparing CFS, so that will go to CFS also. चलो एक बार don't think about this CFS. ठीक है ना? ठीक है. In their separate financial statement, so can you say this CJ sir is preparing their separate financial statement, balance sheet and SOPL. The student sir is preparing their separate financial statement, means SOPL and balance sheet. Correct. So in the separate financial statement, what will come? Its asset means CJ sir asset, and including the share of any asset held jointly means 50% of jointly held asset. Its liability including his share of any liability incurred jointly. Its revenue including his revenue from the sale of output by the joint operation. Its revenue means suppose we have decided that accounting fees will belong to me. Accounting fees will belong to me and you teach mathematics. So mathematics fees will belong to you. And suppose we had two teachers for law and economics. So law and economics fees jointly income. We appoint one employee to teach law and economics. So that fees belong to joint operation now. So that will be divided between two. Correct now. So its revenue means accounting fees, including his share of revenue. Share of revenue means other fees from the sale of output by the joint operation. Its expense including his share of any expense incurred jointly. Means all this information will be given in the question. Done. So in the books of venturer, in the separate books of venture, what will come? What will be recorded? Is asset and his share of jointly held asset. Is liability, share of jointly incurred liability. Is revenue, share of jointly earned revenue. Is expense, share of jointly incurred expenses. Simple. Correct? No doubt. I think no doubt. Now just try to understand this CJ sir means this is one entity na CJ, this one entity, this can be CJ Limited. Now CJ Limited has one subsidiary, so CJ Limited will also prepare CFS na. CJ Limited will prepare CFS also. So from after SFS, what will be prepared? CFS. So if any asset is coming here, that asset will automatically come where? CFS. Therefore it is mentioned. Now I hope you have understood. A venturer should recognize in his separate financial statement and consequently in means automatically it will come where? In consolidated financial statement of venturer. If they are preparing CFS, if they are not preparing, so thank you very much, it will not come, means it will not prepare. Correct? Understood? Same thing for jointly controlled asset. Nothing. Jointly controlled asset also what? No separate legal entity. The same thing. Separate legal entity is not created in the form of joint venture, but venturer own the asset jointly, which are used by them for the purpose of generating economic benefit to each of them. A venturer should recognize in his separate financial statement and consequently in consolidated financial statement his share of jointly controlled asset, its shares of jointly controlled asset, its liability including its share of any liability incurred jointly, its revenue including share of revenue from the sale of output of the joint venture, its expense including its share of any expense incurred jointly. Done. Understood? Now from exam point of view they have given two questions, but that two questions I am not happy with the question, so I will do from examination point of view these two questions. Correct now? What the question says, let us say. Mr. ABC, Mr. A, Mr. B, Mr. C, enter into a joint venture to purchase a land, construct and sell flats. Mr. A purchased a land for rupees 60 lakh on 1/1/2001, and for the purpose he took a loan from a bank for 50 lakh at a rate of 8% interest per annum. He also paid registering fee 60,000 on the same day. Mr. B supplied the material for rupees 4,50,000 from his godown, and further he purchased the material for 5 lakh for the joint venture. Mr. C made all the expenses of advertising, labor and other incidental expenses, which turned out to be 9 lakh. On 30th June 2001, each of the venturers agreed to take away one flat, each to be valued at rupees 10 lakh each flat. Rest were sold by them as follows: Mr. A 40 lakh, Mr. B 20 lakh, Mr. C 10 lakh. Loan was repaid on the same day by Mr. A along with interest, and net proceeds were shared by the partners equally. You are required to prepare consolidated profit and loss account and joint venture account in the books of each venturer. Means they have asked you to prepare consolidated PL account, but can I say will not prepare books of account of our joint venture, because this is what a jointly controlled operation. But they have asked you to prepare consolidated PL account, because they asked you will prepare, but actually we don't prepare na. They have said what? They do not maintain any books of account. So if you are not maintaining a books of account, how can we prepare trial balance, and how can you prepare what? PL and balance it. But from the information given, we need to draw one consolidated PL account. Very easy. Can we draw? I will do, because same to same question will come in exam. Once again, this AS27 we are doing for the first time in CA Inter. So whatever question is given, that all questions are important. Same to same question will come. Got this point what I am saying? Sure. So this all I am doing from exam point of view. So but you need to only help me from the information given, whatever I am asking. So first we'll prepare a consolidated profit and loss account, because it is not a company we can do in T shape. We can use T shape now, or we can want vertical format also we can do. Chalega? Whatever I'm asking, just give me. Batao. Can you give me buy sale of flats? No, no. A how much? B how much? C how much? Batao. 40 lakh, 20 lakh, and whatever I'm asking, that amount you just give me. Okay. Total become 70 lakh. And can I say venturer also purchase some flat from joint venture? So that is also sale of joint venture. So buy flat taken by A, B, C. How much? How much? 10 lakh each. So this become income of what? Joint venture, na? This all become income of joint venture. So this become 30 lakh. Income recorded. Now let us come to the expenses one by one. To purchase of land. But who has purchased? So only A name will come now. How much? 60 lakh. Then what A has done? There is one expense also. What is the expense? Registration fee, na? Registration fee. A has paid how much? Then what? To material, na? How much total material he has supplied? Total bata do. Total, na? It is 9 lakh 50,000. Then other expenses. Other expenses done by whom? How much? This question cannot be easier than this, huh? If this question will come, it will be of 8 marks, means 3 marks, but you need to revise it. Then what? Interest also you were saying something. To bank interest, it will be paid by A, na? A. So on what is the loan amount? 50 lakh ka? This is 10 lakh, 9 lakh? 9 lakh. 9 lakh लिख लो. 50 lakh का how much percentage? For how many months? Pakka? How much it is coming? 2 lakh. Then any other expense? Can you give me the total profit allocated to ABC? First, can you give me total profit? Total become 1 crore, na? Profit is how much? $18 lakh divide by 3 means equal sharing. They have given profit sharing ratio is equal, that it is given in the question. So 1:1:1. 6 lakh 30,000. Done. Now we need to prepare in the books of a joint venture account. Joint venture account. It is very simple account. So what we'll do? Whatever amount paid in the books of A, the journal entry joint venture account debit to bank. Whatever amount received or receivable, it is what? Bank account debit to joint venture. Understood? That is the rules. So can you give me one by one? First what? To bank. This is purchase of land. How much? Then what? Loan received. So by bank, $50 lakh. One by one. फिर registration to bank, registration fee how much? Then what? Then one sale is also there, na? By bank, sale of flat, how much? 40 lakh. Purchase of buy, then Adam buy land and building. This will come as a land and building account. So buy land and building how much? 10 lakh. Understood this point? Then interest how much? Bank interest paid 60. It is 2 lakh. Then loan also paid, na? So to bank, loan paid, ₹50 lakh. 2. Profit of joint venture how much? Profit of joint venture how much? 6 lakh. So will pass one generally joint venture to PL account. So this profit will be transferred to PL of A Limited, Mr. A. Now can you give me the balancing figure? So can you see it means this amount will be received from B and C. Total amount is how much? 12 lakh 60. 18 lakh? That is correct. 18 lakh 90,000. But we don't know how much from B, how much from C. For that we need to prepare joint venture account in their books also. So this we will understand from B books and C books. Understood? But this amount is receivable from whom? B and C. Have you understood this point? Now if you have understood, can you prepare joint venture account in the books of B and C by your own? To do and find out this amount. Done? In the books of Mr. B you are preparing joint venture account. And in the books of Mr. C you are preparing joint venture account. There is one material supplied, it means it will be two purchase, huh? Because inventory will decrease, na? This is material supplied. It was already purchased, na? Are you able to understand? And there is one again, they purchase material. So write on to bank. This is purchase. Are you able to understand this? This is 5 lakh. Then profit how much? So amount is coming, the balancing figure is coming in debit side or credit side? It become to bank, and this is to Mr. A na. How much? 14 lakh 20,000. Huh? Means if you don't know, abhi chhod do, because I know the answer, therefore I have written. Means if the balance sheet figure is coming in this side, means this is amount payable to someone. It is a balance sheet figure is coming in this side, so amount receivable from someone, but we don't know to whom it will be paid or from whom it will be received. So you need to prepare entire account, you will automatically understand. So let us prepare C also. Correct now. Your question is genuine question. So how can you write down directly without preparing C na? Abhi right now we have not prepared the books of Mr. C. So how can you say this is paid entirely to Mr. A? Some amount may be paid to what? Mr. C also. Let us do it. You'll understand. Because I was knowing the answer because of that reason I have written. Chalega? I understood your emotions. Therefore I have deleted. Chalega? So buy bank. Sale is how much? Mr. C. 10 lakh. Buy land and building how much? 10 lakh. They have done some other expense. To bank how much? Other expense 9 lakh. Profit how much? 6 lakh 30,000. Now in this it is payable or receivable? Payable. So it means some amount is payable by B, some amount is payable by C. To whom? A only. And that two total will match with that total. Always. If it is not matching means you are doing some mistake. Got this point? To bank. How much to Mr. A? 4 lakh. Now understood now what I want to say. And this is to Mr. A only. This is balancing figure, huh? And right on here, the total will be match only 14 lakh 20,000 and 4 lakh. And total match means we are doing correct. Understood. Means I am not happy with this question because it is not as per the concept. The concept says that will not prepare the books of account of which company? For jointly controlled operation. But they ask you to prepare what? Consolidated PL account. So if they ask, therefore we are preparing. If they ask, therefore we are preparing. Chalega? Now why I am doing so? Because same to same question might be asked in exam. So we need to respect the question given in ICAI study material. Chalega na? And simple only you have understood. Can we take one more question? Question number 2. A limited, B limited, C limited. So now whenever they say limited, it means now you need to follow what vertical format. I mean the last question is what? It was Mr. A, Mr. B, Mr. C. So we have done PL account, horizontal format. Whenever they give company, company means what? Serial 3 na? Got this point? To that, be careful. Be careful for that point. Decided to jointly construct a pipeline to transport a gas from one place to another that was manufactured by them. So you understand this become jointly controlled asset. Pipeline, they will construct the pipeline to transfer of gas. So there are three companies which require one pipeline for transfer of gas. So they jointly construct a pipeline. Got this point? So this become jointly controlled asset. For the purpose following expenditure was incurred by them. Building 12 lakh to be depreciated at a rate of 5% per annum. Pipeline 60 lakh to be depreciated at a rate of 15% per annum. Computer and other electronics 3 lakh to be depreciated at a rate of 40% per annum. And various vehicle 9 lakh to be depreciated at a rate of 20% per annum. They also decided to equally bear the total expenditure incurred on the maintenance of pipeline that comes to be 6 lakh each year. You are required to show the consolidated balance sheet and the extract of SOPL and balance sheet for each venture. Once again they ask you consolidated balance sheet. So we'll prepare consolidated balance sheet. Can we prepare? Yes, sir. So come to question number 2. So first we'll prepare consolidated balance sheet. Batao. Whatever I will ask that you will say me. Yeah? Batao. First what we write? Equity and liability. Equity and liabilities na. Correct. Then after this what we write down? First we write down shareholders fund. Under this what we write down? Share capital. Whether they have given share capital? No. Whether they have given any liability? No. Correct. Means only asset is there. And we all know that asset is equal to what? Equity plus liability. Means if we know total asset, do you know share capital? Correct na? So they have not given any liability. There is no liability. So of course share capital will be equal to what? Total asset. Now we write down point number 2. Assets. Can I say all assets are PP? So first we write down non-current asset. Under non-current asset what we write down? PP. Can you give me PP after depreciation? Total PP. If you want we can prepare one working note. Let us prepare notes. You want to prepare notes to account? But bana lete na, because this question same to same will be asked. So if you will not prepare, they will not give marks. Super easy question. Can we prepare? Yes, sir. Notes to account. One share capital. That we don't know. But can we write down how much share capital of A Limited, B Limited, and C Limited? They write down what? PP. Can you give me one by one? First is what? Building. Building after depreciation is coming how much? A Limited, B Limited, C Limited. How much? 11,40,000. What is the profit? What is the ratio given for allocation? Equality. So can you divide in 3? 1 by 3? 3,80,000. Understood? Then can you give me after that is what? Pipeline. A, B, C. Total is what? After depreciation? 51 lakh. Can you give me divide by 3? 17 lakh. Then what? We have computer. It also belongs to A, B and C. Can you give me the total after depreciation? 1,80,000. Divide by 3. 60,000, 60,000, 60,000. There is one vehicle also. Can you give me after depreciation how much? 7,20,000. Divide by 3 how much? 2,40,000. Can you give me the total of PP? The total of PP I must be 71 lakh 40,000. This total will go where? In balance sheet. 71 lakh 40,000. What is the total? 71 lakh 40,000. So what is the total of equity and liability? 71 lakh 40,000. So what is the total of share capital? 71 lakh 40,000. So how much capital will come in notes to account? 71 lakh 40,000. Can you give me divide by 3? Huh? 23 lakh 80,000. 23 lakh 80,000. 23 lakh 80,000. Understood? Now for each venture they have asked what? Extract of PL and extract of balance sheet. Oh my god. This much so they will not ask. कितना बनाएंगे? Correct ना? If this question will come, this question should be of 14 marks. But they will not ask 14 marks question from this now. So I am just drawing one, or in one column, in one format can I draw all? Correct now? So write down first extract of SOPL. A, B, C. What is the depreciation and amortization? Can you give me the total? Have we calculated somewhere? We have to again calculate. Total depreciation. Divide by how much? It is 4,20,000. 4,20,000. 4,20,000. And there is one maintenance cost. You can add on other expense. It is 2 lakh. 2 lakh. 2 lakh. Understood. Whenever there is extract, there is no need to total it, huh? Because it is only an extract. Now, if you want to prepare notes to account, keep note number 1, note number 2. In exam, you can do in this way if you want to do. But I don't know whether they will deduct marks or not. But of course, this type of question they will not ask. This much length they will not ask from this chapter. Then we can prepare extract of balance sheet. So only we know PP, A limited, B limited, C limited. We write down assets under asset, non-current assets. Under non-current asset, PP. Can you give me divide by 3? Total PP we know how much? 23 lakh 80,000. 23 lakh 80,000. 23 lakh 80,000. If you want to prepare notes, prepare what? Notes number 3. Note you can do by your own. Solution is given. Understood. Bakwas question, huh? But if I will not do, you will also not do. And suppose same to same question come, then simple question become complicated. So you have understood jointly controlled operation, you have understood jointly controlled asset. Now we'll come to jointly controlled entity. That is more interesting. Jointly controlled entity. Understood? Means, abhi I am saying A Limited have joint control over what? AB Limited. So AB Limited is a joint venture and A Limited is what? Joint venturer. Correct na? We are right now thinking from joint venturer point of view. What they say? In the separate financial, in the separate balance sheet of A Limited, investment in joint venture will come and this investment will be recorded as per AS 13. As per AS 13. This investment will be recorded as per AS 13 only, na? Correct? Means if suppose AB Limited subsidiary, so in subsidiary also same thing we do. In the books of parent company, separate balance sheet investment will come as per AS 13 only. But in separate, in consolidated balance sheet, what they say, if suppose this is 40% investment, suppose they have done 40% investment, so 40% of asset will come, 40% of liability will come. Understood? Means we'll do proportionate consolidation. Means for subsidiary we do full consolidation. For joint venture which are jointly controlled entity, we'll do proportionate consolidation. Proportionate consolidation means what? In case of subsidiary, even though you are holding 70%, we bring all asset, all liability and recognize minority interest. But here we'll only recognize what? 40% of asset, 40% of liability, and will not recognize what? Minority interest. Means if you know full consolidation, so you know proportionate consolidation. Correct now? Only in this case what will not come? Minority interest will not come. Minority interest will not come. This is the point. Means what they want to say, let us read what they want to say. Jointly controlled entity. A jointly controlled entity is a joint venture which can be in the form of company or partnership firm or any other entity in which each venturer has interest. So it can be in the form of either company or partnership firm. It can be in the form of company or partnership firm. Means in partnership firm, partner become joint venturer. Partner become joint venturer. Being a separate entity, separate set of books is maintained for joint venture, and in the individual books of venturer, the investment in joint venture is recorded as an investment as per which AS? AS 13. Understood? Correct. Reporting of jointly controlled entity. In separate financial statement of venturer, in venturer's separate financial statement, interest in jointly controlled entities should be accounted for as investment in accordance with AS 13. Same thing is written. But in consolidated financial statement of venturer, in consolidated financial statement, the venturer should report its interest in jointly controlled entity by using which method? Proportionate consolidation method. Proportionate consolidation method. So what is the meaning of proportionate consolidation method? So in case of proportionate consolidation is a method of accounting and reporting whereby consolidated balance sheet will include venturer's share of each of the asset and liability of a jointly controlled entity. Means if you are holding 40%, so 40% of asset and 40% liability will be recorded. Similarly, consolidated SOP will include venturer's share of each of the income and expense of jointly controlled entity. So 40% of income and 40% of expense of JCE will be recorded. means procedure for proportionate consolidation. Most of the provision of proportionate consolidation method are similar to the provision of AS 21. Means following points should be kept in your mind. First, recognize goodwill or capital reserve as same as per AS 21. Means as you have done calculation of goodwill or capital reserve in AS 21, same principle we applied. Means cost price of investment less fair value of INA, means 40% of fair value of INA. Dividend received, of course, pre-acquisition dividend. That is rectification. Correct now. Then minority interest will not be recognized. Intercompany debt will be cancelled proportionately. Means the intercompany balance, because we have recognized only 40%, so we can only cancel to the extent of 40%. Unrealized profit or loss will be cancelled proportionately, because we have recognized proportionate, so we can cancel only proportionate unrealized profit. Khatam. Understood? Correct. Have you understood this point? Now, no question of this proportionate consolidation has been given. No good question has been given. So, I like to take the question whatever given first. Then we'll think about the one question. Come to question number 4. This question can be asked in exam. Means from my point of view, if I will create a question in exam, I will ask question number 4. Question 4, that on important from exam point of view. A Limited entered into joint venture with B Limited on 1:1 basis, and a new company C Limited was formed for the purpose of same purpose, and following is the balance sheet of all the three companies. A Limited own balance sheet, B Limited own balance sheet, and C Limited is a joint venture. You can see investment in joint venture 2,50,000 and 2,50,000 is coming. Prepare the balance of A Limited, B Limited under proportionate consolidation method. Can we start? In exam, can we prepare A and B separately? In class, we'll do together to save our time. But in exam, this question, please prepare. Please, I am saying, please prepare separately. Otherwise, they will please you. Please come after 6 months. Correct? Understood? So, what should not be done, you should not do. Okay? But in class, can we prepare in one format? Two balance sheet? Chalega? Okay? Chalo. So I am doing by informing you, huh? So question number 4. So we need to prepare balance sheet of asset which date is given? Not given. So in one column we write on A Limited, in one column we write on B Limited, and in one column we write on notes to account. Apply your common sense. Huh? You will say what will be plus, what will not plus. If you remember consolidated balance sheet, whatever we have done where? AS 21. Chalega? Chalega? Batao. First, let us do only A Limited. Huh? Otherwise, you will be confused. Point number 1. What we write down first? Equity and liability. Point number 1 is what? Shareholders fund. Point number A is what? Share capital. Achha, one more point. A new company was formed, so this joint venture was created at the beginning of the year, and this balance is given at the end of the year. That only assumption we should take, na? Means date of acquisition is beginning of the year, and date of consolidation is, so the entire profit of the year is what? Post acquisition profit. Post acquisition profit. Huh? I have just given hint. Now say, think and say. But we write on share capital. A Limited how much? 10 lakh plus 5 lakh ka Very good. Excellent. Means you remember what? Excellent. Excellent to excellent, Nare. Good point. I was expecting you will give wrong answer. I was expecting. But chalo, theek hai. But everyone has not responded. So those who have not responded, have you understood? It is 10 lakh. Only 10 lakh. There also we are not supposed to add in share capital, na? Same thing. But the reserve and surplus. Reserve and surplus. So that 12 lakh profit is a post acquisition profit. Post acquisition profit will be allocated to what? To allocate it to A and B in respective ratio. So A and B means 1:1. Correct. First you give me only A. So reserve and surplus, it will become 18 lakh plus 6 lakh. How much? 24 lakh. You can do B also. Then point number 2, we write down non-current liability. We have loan, write down long-term borrowing. Can you give me? It is 3 lakh plus 4 lakh. Then we have what? Current liability. How much? 4,50,000. Can you give me the total? ₹42 lakh, 50,000. Something is wrong. Then can you come to asset? So point number 2, we write down assets. In asset, first we write down non-current assets. Under non-current asset, what we write down? APP. Can you give me PP? How much? 40 lakh 25,000. Then we have investment will come. Investment will come. Investment will not come. Then point number 2. Leave always one space, because any difference will be goodwill or capital reserve. Okay, this is shortcut without calculating goodwill. So you can also make one working note of goodwill capital reserve. But I was knowing in this question there is no goodwill or capital reserve. Okay, na? Understood what I am saying? No, they have also not done the working note. मैं क्या करूं? But the differential figure of this balance sheet understood na? That will be goodwill or capital reserve. But the current asset is how much? Now देखो balance sheet tell it check करो. It means there is no goodwill, no capital reserve. So I know same question will come in exam. Do B by your own. Give me the only amount. You can do that together also. But in exam, please prepare separate balance sheet. Total you are giving. अरे मेरे को अलग अलग बता ना. 7,50,000 then 22 lakh then 5 lakh then 3 lakh then 37 lakh 50,000 then 36 lakh then 1,50,000 total 37 lakh 50,000. Now can you prepare notes to account by your own? So notes to account only this way: A limited, C limited, B limited, C limited, like this. Then we can do. But in exam, please, because same question will come for 10 marks, so why to take risks? Please separate balance sheet. A super easy question, why to take risk? Correct now? And this is the high chance they will ask this question in exam. There is only one good question I will say they have given. No show account you can prepare now. That is also must. Let me take one more question. Question number 3. This question can be also asked. This I will do from the solution only if you permit. A Limited, a UK based company, enter into a joint venture with B Limited in India, wherein the B Limited will import the goods manufactured by A Limited on account of joint venture and sell them in India. A Limited and B Limited agree to share the expense and revenue in the ratio of 5:4 respectively. So revenue and expense in which ratio? 5:4. Correct. And profit are distributed equally, but profit are equally. Revenue and expense 5:4. A Limited invested 49% of total capital, but has equal share in all the asset and is equally liable for all the liability. But share capital is 49% and 51%, but assets and liability are 50-50. Following is the trial balance of joint venture at the end of first year. They have given trial balance, purchase, other expense, sale, PP, current asset, unsecured loan, current liability, capital. Closing inventory is closing stock. You are required to prepare consolidated financial statement. They have asked consolidated financial statement. Of which company? Of joint venture. Arey bhai, this is very simple. We can do now. Means actually this is not consolidated finance. They don't know how to create question. It is what? They have asked the balance sheet of which joint venture they are asking na. So that is not consolidated financial statement. That is a balance sheet of joint venture. Understood what I am saying? क्या पूछा है नालायक? They don't know anything. This is what? Not a consolidated financial statement. Consolidated financial statement will be prepared by joint venture or joint venture? Joint venture or na? But if they are asking prepare the financial statement of joint venture, it is not a consolidated financial statement. It is a financial statement. It is a financial statement. Na? Dekho, question is not correct. Question is not correct na? Can I do from here only? But it can be. Dekho, these are all questions given in ICAI study matter. We need to respect the wrong question also. Correct? So, can I do from here? Batao. Revenue from operation, because it is a company. Company means in format. So, revenue from operation total is given how much? 13,05,000. Sales given na? Then purchase total income how much? 13,05,000. Then purchase given how much? 9 lakh. Okay. Then one changes in inventory will come. Opening stock is nil, but closing stock is given 1 lakh. So changes in inventory, but the plus key minus negative, because closing stock is more than opening stock. Very good. So changes in inventory they have given 1 lakh. Other expense given how much? Total expense become how much? This become profit before tax, and there is no tax, so this is only profit for the year. Then balance sheet let us prepare. Correct. But share capital given how much? So share capital is not given, or the given 4,01,000. So share capital 4,01,000. Reserve and supply is nothing but profit. Profit. Long term borrowing given how much? 2 lakh. Correct. Current liability given how much? 1 lakh. PP given how much? 6 lakh. Inventory given how much? Inventory means closing stock 1 lakh. And other current asset 2 lakh. All given. So I don't know why they have given this question. Allocation. Can I say allocation we don't do in this balance sheet? Allocation will do where? In the joint venture, na, but the allocation they have done here, no, they don't know anything. But we'll follow the answer. But this will be allocated in which ratio? 5:4 you can allocate. In exam will allocate, huh? Purchase will be allocated which ratio? Other expense, closing stock. No, it is an asset. 1:1. Asset will be 1:1, na? Share capital they have given. No, 49% and 51%. Check karo that ratio na check karo. The first check karo. Because I have not done this question, huh? For the first time I am also doing. It is 49:51 na? Chalega. 9. Profit and loss account to came equally only 1:1. Unsecured loan 1:1. Current liability 1:1. PP 1:1. Inventory 1:1. Other current asset 1:1. Done. Free mark. So this is free marks, na? But if you will not revise, you will not be able to do. Means if you will not revise this question, you will say out of syllabus. Because so many AS we have done, how much you can retain? So these are the chapters which you need to revise just before exam. This does not require continuous revision. For example, AS 19 require continuous revision. Lease. AS 22 require continuous revision. Income tax. Correct na? AS 10 require. So there are some AS which require some revision. This to ho gaya, theek hai yaar. Understood. Chalo. This also done. Now there are some more points. Let us complete it. Can we complete? Discontinuing the use of equity method. Sorry. Something. Please. Discontinue the use of proportionate consolidation method. PCM. Discontinuing the use of proportionate consolidation method. So when a venturer will discontinue the use of proportionate consolidation method that we are discussing. So can I say when it ceases to have joint control? When joint control is lost, they will not prepare consolidated financial statement. Simple. So a venture should discontinue. This is important for theory as well as MCQ. A venturer should discontinue the use of PCM. PCM means from the date it ceases to have joint control in the joint venture, but retain either some or whole investment. Investment is there, but they lost what? Joint control. Understood? If the joint control is lost due to some contractual disagreement, whatever, so automatically they will not prepare what? Proportionate. They will not use what? Proportionate consolidation method. Or the use of PCM is no longer appropriate because the joint venture operates under severe long-term restriction. Joint venture operate under severe long-term restriction that significantly impair its ability to transfer fund to the venturer. Sometimes what happened due to some act etc. Joint venture have some restriction that they cannot transfer their fund to what? Joint venture. Or joint venture cannot transfer their fund to what? Joint venturer. It means, can I say, if there is such restriction, so even though there is a contractual agreement, there is no joint control. There is no joint control. Correct now. Suppose I created one company. And I have a control over that. But now there is some restriction that I cannot use the funds. It means there is a restriction. It means I do not have what? Joint control. So what they are saying? Because the joint venture operate under severe long-term restriction. There is some long-term restriction. That long-term restriction may be because of act or because of contract, whatever. It may be because of act or because of contract that significantly impair his ability. Means they do not have now ability to transfer funds to the venturer. They cannot transfer their funds to the venturer. So ultimately venturer is not enjoying any economic benefit. Venture is not enjoying any economic benefit. So if they are not enjoying economic benefit, so can I say then there will no joint control and there will no PCM required. Will not do any consolidation. Correct? So can you repeat once again? A means what? It ceases to have joint control in the joint venture. Second, the joint venture operates under severe long-term restriction that significantly impedes ability to transfer funds to venturer. Correct? याद रहेगा, रट्टा मार लो. Correct? Now, from that date, रट्टा means memorize. Correct? From that date means once the PCM method is discontinued, then whatever investment is coming, that investment will be accounted as per which accounting standard that we are understanding. Correct? So what they are saying, from the date of discontinuing the use of PCM method means once you have discontinued PCM method, so if the interest in the entity is more than 50%, then investment in such joint venture will be accounted as per AS 21. Correct? If the interest is 20% but 20% more but less than 51%, then investment are accounted as per AS 23 coming soon, that is associate. Next AS is AS 23 only. For all other case of investment, then other investment treated as per AS 13. Means, can I say in this way? Can I say in this way? Just try to understand. Everyone. In the separate balance sheet of investor, investor you understood na, who has done investing, who has done investment. So can I say investment in subsidiary will be as per which AS? Batao. No, AS 13. This is separate balance sheet na. This is not consolidated balance sheet. Listen whatever I am saying. It's separate balance sheet. But the investment in joint venture will be as per what? Means this is jointly controlled entity. Yeah? AS 13 only. Investment in associate coming soon. But the AS 13 only, it is coming soon. And investment in other entity. AS 13 only. This you have understood? All are AS 13. But in CBS of investor, will you write on investment in subsidiary? No. The assets and liability along with goodwill of which company? Subsidiary company. Will apply full consolidation method, FCM. Full consolidation method as per which AS? AS 21. Are you getting what I am saying? AS 21 na? Same thing. We write on asset and liability along with goodwill of jointly controlled entity, but only by using proportionate consolidation method as per which AS? AS 27. Are you getting? This we have understood in 2 AS. AS 23 is left. This is the add-on. This type of question can be asked in exam. Done? Now, madam. Now, investment in associate coming soon. We have not yet done. Now, investment in associate will come. Means assets and liability will not come. As per equity method. Now, what is equity method that I need to explain? EM means what? Equity method. As per which AS? AS 23. This equity method is still left. Equity method. EM means equity method. Equity method. Write on equity. Equity method. Coming soon. An investment of other entity will come what? As per AS 13 only. Investment in, not of. Sorry. A means associate. Huh? A means what? Got this point? Now you will understand. So from the date of discontinuing the use of PCM, but the PCM is discontinued in SFS or CFS. It means we are discussing about CFS. We are not discussing about separate financial statement. Am I right or not? If the interest in the equity is more than 15%, that investment in such joint venture should be accounted as per AS21. In CFS we apply AS21. Then if the interest is 20% or more but less than 50%, then it become associate. Then we'll apply AS23. But for all other cases, investment is treated as per AS13. Now I think it is more clear. Understood? Now, last point. Exemption from PCM. Exemption from PCM. When PCM is exempted, means even though there is a joint control, but then also will not apply PCM method, will not apply proportionate consolidation method. So there are 2 points. In the consolidated financial statement, a venturer should report its interest in jointly controlled entity using proportionate consolidation method except A and B is satisfied, except in these 2 cases. An interest in jointly controlled entity which is acquired and held exclusively with a view to subsequent disposal in near future, means you have acquired one investment in joint venture with an intention to sell in near future. So can you say there is no need, there is no joint control, means you have acquired only for the purpose of trading, means you have acquired some company and you have intention to sell in near future, means you do not want to derive some economic benefit from that. Correct now? Means there is only intention to sell that now. There is only intention to sell that investment. Well, then there is no need to prepare consolidated financial statement by using proportionate consolidation method. Understood? So an interest in jointly controlled entity which is acquired and held exclusively with a view of its subsequent disposal in the near future. This near future has not been defined. So what is near future? We don't know. Means matter of judgment. It is a matter of judgment. Understood? Correct? This point. Or an interest in jointly controlled entity which operate under severe long-term restriction that significantly impair its ability to transfer the funds to venturer. This point already you have understood. In both the above case, KNSF will not prepare CFS, then in SFS, investment will be accounted as per AS13. Understood? Got this point? So this is also important for MCQs or it can be important for theory question, these 2 points. So you can see chapter completed, but there are 2 points which is not given in this, just write down. Means I found that they have given some question based on that also, which is not given here. So let me teach that also. Transaction between a venturer transaction between venturer and joint venture. Means there is some transaction between venturer and joint venture. Let me explain you with one question better. Can I explain you with one question only? What happened? Suppose A Limited and there is one joint venture JV Limited. Understood? So first case one is what? Sale of asset. Sale of asset by whom to whom? So joint venturer has sold some asset to JV Limited. Suppose the cost price is 100 lakh and sale price is equal to 80. Understood? Correct. So what journal entry will do in the books of A Limited? Means we are discussing in the books of A Limited. In the books of A Limited that we are discussing. Have you understood this point? Correct. And suppose this A Limited hold 40% in this joint venture. 40% in joint venture. Just try to understand what they want to say. JV Limited will pass one journal entry asset account debit to bank. They have purchased now. It will come 80. And from this 1 second this asset will come 40% in the books of A Limited or not? Means actually A Limited has sold only 60%. Yes or no? A Limited has only sold 60% now, because automatically 40% will come. Means substantially, means as per substance of this transaction, A Limited has sold only what? 60%. So they should only recognize gain or loss to the extent of what? 60% only. Means they should not recognize any gain or loss for their own share. Correct. So what journal entry we should do? So it should be bank account how much? Bank account how much? 80 into 40% how much? 32. To what? Asset how much? 40. 40% na? And there will be loss how much? Loss of rupees 8. Loss of rupees 8. Got this point? Have you understood? Means they have recognized only loss to the extent of other parties here. Means they should not recognize the share of loss, means their own share of loss, because अरे my mistake, इसको 60 कर दो ना. ओके चलो ठीक है, वाई टू 60% कर दो. My mistake, I have written 40% ना, तो I have done 40% of this. चलो ठीक है. Now it is 60. This will be how much? Sorry, 80 का 60% how much? 48, 60, 12. Now okay, we should recognize only 60% share. My mistake. Understood this point? Means now in the balance sheet of A Limited, how much asset will come? 60. How much? 100 minus 60. 40. Understood? Now one doubt will come. Sir, if the sale price is 80, then so already the asset is impaired by what? 20 or not? So we should recognize that loss also. So what this AS says, that if there is an objective evidence of impairment, then they should recognize the entire loss. If there is an objective evidence of impairment, indicator of impairment, AS28, now okay. Means if there is an evidence of impairment, then recognize their own share of loss also. Then we should recognize the loss to the extent of what? 8 rupees also. Means 12 to recognize na. How much not recognized? 8. So we should recognize that loss also. So whenever there is an evidence of impairment, then recognize entire share of loss. Understood? Correct. Understood. Because they have given some question based on this, therefore I am teaching. I was not supposed to teach. It's a sort of an interesting point. Can I give you an idea? Right on. So what is the topic? Topic is what? Sale of asset. Write down case number अच्छे से. Example तो you have written ना? Sale or contribution of asset to joint venture. Correct. Point number A. Venturer should recognize only the portion of gain or loss which is attributable to other venturer. Understood this point? First point have you understood? Point number B. However, if there is an evidence of impairment loss of asset transferred, then venturer should recognize what? Very good. Should recognize full amount of loss, but not gain, huh? Not full amount of gain, only full amount of loss. Understood? Got this point? Simple. Understood? Now, the second case. So case number 2 is what? Purchase. Now there will be purchase of asset from whom? From joint venture. I'll give you example, try to give answer. Now A Limited has purchased from AB Limited joint venture, and suppose A Limited is holding 40%. The cost price is 100, sale price is 80. But what journal entry will do in the books of A Limited? Asset account debit to bank. How much? 40%, 60%. Here is 40% already recorded in the books of A Limited. 40% already recorded, na? Means this 100, 40% already recorded. Means we need to record only what? To the extent of 60%. So 60% of what? 80 only. 60% of 80 now. So 60% 80 how much? 48 and 48. Understood? Have you understood? Correct. Right. In this point number A. Right. Venturer should not recognize should not recognize its share of profit or loss of joint venture until the asset is actually sold to a third party. Understood? This much you understood? Correct? Means what they want to say? There is a loss of how much? 20. Out of this loss, how much belong to A Limited? 40%. So whether they should recognize this loss? No. 40% of 20 they will not recognize. Means this joint venture, whatever profit or loss incurred in the books of joint venture, 40% belong to what? A Limited. So from this transaction, 40% of this loss belong to what? A Limited. That is nothing but this 100 lakh. Out of this 100 lakh, 40% is already recorded in the books of what? So 40% is already recorded in the books of A Limited. Now they have acquired how much? 48. So total become what? 88. Means, can I say 100 rupees asset is now coming in the books of A Limited, 88, means automatically it is reduced by what? But that is a share of loss of other party. Means they have not recognized their share of loss. Why? Because it is not sold to third party. How? Once it is sold to third party, that 8 rupees loss will be also recognized by whom? A Limited. Not able to understand. One second. Listen. One second, listen. Because this question only is given in the book JB. So 40% this too you understood. Now they have done one transaction. The cost price is 100 and sale price 80. So there is a loss of how much? So this loss belongs to A and B na. Suppose B, A and B. Suppose B is the other party. 40% and 60%. 40% is 8 and this is 12. Now if suppose this asset was sold to third party, so A Limited would have recognized this loss or not? All the transaction of JB Limited will be recorded in the books of A Limited to the extent of their say PCM proportionate consolidation method. So what is the loss of JB? 20. So 40% will be recorded in the books of what? A Limited. But this 40% is the asset of A Limited only. So whether they will recognize their own share of loss or profit? No. Because this asset is already coming in the balance sheet how much? Asset 40 rupees. It is already coming now. Means what journal entry they are doing only for the 60% share. So what journal entry doing? They are doing asset 48 to bank 48. It means now in the balance sheet what will be the value of asset? 40 plus 48 means 88. Means 100 rupees asset is now coming in the balance sheet of A Limited. 88 means out of 20 rupees, how much reduction done? 12. But that is not a share of loss of which company? A Limited. So whether they have recognized their own share of loss? No. That is the first point. The venturer should not recognize its share of profit or loss of joint venture until the asset is actually sold to a third party. Now this asset is sold to third party. Now they will recognize the loss. Suppose now A Limited has sold this asset at 80 rupees. So how much loss? 8 rupees they will recognize now. So once it is sold to third party, they will recognize their share of loss. Now understood? Correct. But if there is an objective evidence of impairment, then they will recognize their share of loss. Means how much? 8 rupees. Understood? Correct. So point number B. However, if there is an evidence of impairment, so because the question is silent about recoverable amount, so you write down in exam, if there is an evidence of impairment, then they will recognize their share of loss. Then venturer should recognize their share of what? Loss, not gain, huh? Only loss. Now have you understood this point? Yes, sir. Correct. So 2 point. So I have seen one question has been given. Therefore I have done this also. Because if I will not do this point and they will ask this point only, then wastage. Entire one class is wasted then. Understood? But I was not expecting that they will ask question from this topic. Means inter to always they are what? They give some unexpected. Come to question number 8. Now you'll understand. Induga Limited, a venturer, purchase an asset of 20 lakh from jointly controlled entity. Written down value of in the books of joint venture was 20 to 24 lakh. So they purchase an asset of 20 lakh whose book value is what? 24 lakh. Under PCM, proportionate consolidation method, what adjustment Induga Limited should do while preparing financial statement? Induga Limited has 50% interest. So it is case 1, case 2. Purchase na. Means I have given case 1 sale of asset, case 2 purchase of asset. This is a question of purchase of asset. So they will recognize, whether they will recognize their share of loss. So what is the total loss? 4. Their share of loss is what? 2 lakh. So 2 lakh, whether they will recognize their share of loss? No. What answer they have given? Induga Limited should not recognize its share of loss arising to joint venture from the purchase of asset from the jointly controlled entity until the asset is sold to third party, provided recoverable amount of asset is not less than, there is no evidence of impairment. Now you have understood this point. So this question will come for 4 marks or MCQs. So you can write now. Even though it is coming 4 marks, only this much is required. Don't write on 1 page. Correct. One more question, one good question has been given. Similar question is given in CA final. Believe me, I was not expecting they will give this question at CA inter level. The same question they have given in CA final. Means no level. They compare. This is like a interna. This is final. I always think like this. Final is below what? Inter. But because of what? That expectation. See, once you pass CA inter, a lot of expectation will come from you. Or CA inter pass. Now the pakka CA, with that expectation na, what happens? Sometimes we are not able to study. There are a lot of expectation na. What happened in World Cup? India, a lot of expectation. Means we thought that India win. India won only. Means every person has purchased what? Patakas. कि मजा आएगा, सजा हो गया. Over expectation na. It was over expectation. In 2011 there was no expectation. In 1983 no expectation. We won the World Cup. But this time full expectation. Understood? Normally what happens in pressure we can't perform. When there is a lot of pressure now, we can't perform. We can't perform. So that pressure we need to eliminate. That pressure we need to eliminate. This is just like a simple exam. Act that this is just like 12th exam. You will pass. 12th also you pass now. So this is foundation also you pass. So this also you will pass. Correct? Yes. A and B, you will give the answer. Apply your common sense, but good question I will say. A and B established as separate vehicle. Separate vehicle means separate entity. That is entity given also J. Wherein each operator means joint venturer, has 50% ownership interest and each take 50% of output. On formation of joint venture, A contributed a property with A contributed means A given na, A has given a property with a fair value of 110 crore and agreed to contribute his experience over the year towards the venture. B contributed equipment with a fair value of 120 crore. Now B has contributed how much? A equipment with a fair value of what? 120 crore. The carrying value of contributed asset. A books how much? And B books how much? Have you understood the question? So what will be the gain? What they have asked? Means the question they have not asked, but you need to recognize gain to be recognized by A and B. How much gain A will recognize in their financial statement? How much gain or loss will be recognized by B? Can I explain once again? Yes. Means what they want to say. This is question number 5. So A, B, and this joint venture. Sunna, 1 second. Sunna. A has contributed one asset whose carrying amount is how much? Batao. And fair value is how much? 110. B has contributed one asset whose carrying amount is how much? Huh? And fair value is what? 120. So how much gain or loss to be recognized in the books of A and in the books of B? That we need to find out. Correct. Now just try to understand. This asset will come at 110 यहाँ पर. This asset will come at 120. Correct. Means this asset 120. What was 50-50 na? 50. 120 now how much will come यहाँ पर? 50%. And this will come how much? 50%. But this will to remain same na? Correct. And can I say this 50% will go, this 50% goes, means they need to de-recognize 50% of their own asset. Are you getting? Means just write on the fair value of asset contributed by B Limited. How much? Batao. It is 50% of what? 120. How much? 60. And carrying amount of asset contributed by what? A Limited. How much? That will de-recognize. So how much will de-recognize? 50% of 100. That is what? 50. So how much gain? 10 rupees gain. Means they will de-recognize 50% of the asset contributed, and they will recognize 50% of the asset contributed by what? Other party. Wahi hoga na? Correct. Means they will recognize one asset. They will recognize one asset contributed by B. How much? 60. And they will de-recognize the asset which is contributed by A. How much? 50. The difference will be what? Gain. Gain is how much? 10. Same thing we can do for B. Do by B. Batao. Asset. How much contributed by A? It is what? Fair value. So what is the fair value? 110. 55. And how much asset of B will be de-recognized? It is 40. So what is the gain? Gain recognized is 15. Understood. The same question have been given in the recent RTP of what? CA final. Recent RTP. And they have not understood. I need to explain them. Have you understood? So if you can understand, and there also same explanation I am giving, means both are same na. Means I can teach you right now CA final. But you should have eager to learn that. That figure will come after passing CA interest, CA intro only. That interest will not come in CA final syllabus right now, no? But if I will teach, you will understand. Have you understood now? First you understood or not? Right? Correct. First, have you understood? Correct. So in exam, you write down this way. A share in the fair value of asset contributed by entity B. Understood? 60. A share in the carrying value of asset contributed by A to the joint venture. That is 50. The difference become gain. In exam, write down this way. This they have done only for A, but we can do for B also. Just reverse it. Now, if you want to write down, write down. You want this? What do you want? Understood now what I want to say. You want to write down properly? Understood? Don't give journal entry in exam, huh? Because this journal entry they will not be able to understand. Correct? In exam, write down in that para format. Contribution. You see, I have not written properly, na? I was expecting that you will not write because you are not writing anything. Chalo. Fair value of asset contributed by B and carrying amount of asset contributed by A. Now, okay. So this is coming 60 and this is coming 50. The difference is coming what? Gain. So if fair value is more than what? Carrying amount. So that is gain only. And this gain will be transferred to PL. Now this chapter is completed from my point of view. That is also you will be confused. You will be able to understand diagram. This much you have written, everyone. Huh? Just write down. B also you can do na. B may write down fair value of asset contributed by A. Correct. And carrying amount of the asset contributed by B. 50%, 50%. Be careful if they have given different percentage 40, 60, then थोड़ा confusion होता. 50, 50 तो easy है. So A is holding 40%, B is holding 60%. Then be careful. They are writing. Chal. One more point might be important for MCQ, that also you write down. Now understood? Now understood? When I was in CA final, so we used to do AS 27. That time there was AS in CA final syllabus. Then I have never understood this point at that point of time. I used to say, what is this, Baba? I have left it. Question doesn't come. Pass. Correct na? So at CA final I have not understood. And I need to teach you at CA enter and you are able to understand. Means you can understand everything if you are trying to understand. That I just want to say. Means I was not expecting that they will give this question in CA enter book. But they have given. Chalo, padha do. You ask the same question to CA final student, they will also not able to explain perfectly. But you have understood? Chalo. But on one last point, that down because this might be also important for MCQs. That on operator of joint venture. Now just try to understand, out of all the venturers, one person may be appointed as operator to manage the entire joint venture business. So suppose there are three partners, one will be working partner, two will be sleeping partner, so will get remuneration. All will get remuneration. Only working partner will get remuneration. Remuneration means what? Salary. The sleeping partner will also get remuneration. Then so I will only sleep. Why do work? Correct na? Profit everyone will get. Share of profit belong to all the partner in profit sharing ratio, but remuneration will be only given to working partner. So it might happen there is one of the working joint venture and others are what, sleeping. So the whoever is managing is known as operator. So they will receive fee. So any fee received by operator will be accounted as per AS9. AS9 revenue recognition, and this will become expense of what, joint venture. This will become expense of joint venture. Just write down this much. Payment to operator is recognized as an expense in the books of joint venture and in the books of operator as per AS9. Understood? So this can be asked as MCQ. Fee operator fee will be accounted as per which accounting standard? So as per AS9 in their books. Done. Let us come to MCQs. Then this chapter will be closed. MCQs कर लेते, okay? Point number 1. State which of the following statement are correct. Correct. The requirement relating to accounting for joint venture in consolidated financial statement according to proportionate consolidation method as contained in AS27 applies only when consolidated financial statement are prepared by the venturer. Only when consolidated financial statement are prepared by the venturer. चलो पढ़ो दूसरा. The requirement relating to the accounting for joint venture in consolidated financial statement according to the proportionate consolidation method as contained in AS27 applies irrespective whether the consolidated financial statement are prepared by venturer or not. Then, correct. An investor in joint venture which does not have joint control should report its interest in joint venture in CFS in accordance with AS 13, AS 21 or AS 23 as the case may be. This is correct. Doubt will come in 1 and 2. 1 and 2. So just try to understand what they want to say. Everyone. Correct. Just try to understand. Suppose A Limited has one subsidiary and joint venture, correct? So A Limited is preparing what? SFS as well as CFS. So for subsidiary they are applying what? AS 21, and for joint venture they are applying what? 27. This two you have understood. But suppose A Limited is having only joint venture, they have no subsidiary. Now the question is that whether A Limited will prepare CFS. Whether A Limited will prepare CFS. No. A Limited has no subsidiary. So whether A Limited will prepare CFS. Are you getting what I am saying? A consolidated financial statement as per AS 21 is prepared only when they have control and they have a subsidiary. So it means, can you say in this case so they are not preparing CFS, means AS 27 is not applicable only na? AS 27 is not applicable. Bolna yes or no? In this case AS 27 applicable, not applicable? Means you can apply AS 27 only when A Limited is preparing what? CFS na? And they will prepare CFS when? When they have subsidiary. Means in this case so of course AS 27 is applicable in CFS because A Limited is preparing what? CFS. In this case so A Limited is not preparing CFS, so whether they will apply proportionate consolidation method, they are not preparing CFS, so there is no need to apply what? Proportionate consolidation method. Understood? Correct. However, this will also be rectified when you will come to CA final. Abhi I am just answering as per this question. So you can see point number 2 what they have written. The requirement relating to proportionate consolidation method as contained in AS 27 applies irrespective whether CFS are prepared by venturer or not. So this point number 2 is what? Incorrect. Point number 2 is incorrect. But requirement relating to PCM as contained in AS applies only when CFS are prepared by venturer. This is what? Correct. So which option is correct? Point number B is incorrect. Understood? Have you understood? Good question. Madam, good question. Just revise it. Understood? Then identify which of the following is not a feature of jointly controlled operation. Each venturer has his own separate business. Now, each venturer may have separate business. I said now CJ sir and students have their own business. I started with this only. Yes, it is correct now. There is a separate entity for joint venture business. There is a separate entity for joint venture business. No. Each venturer record only his own transaction without any separately set of books maintained for the joint venture business. Correct. There is a common agreement between all of them. So what's common agreement? So what they have said, what we need to find out? Identify which of the following is not a feature. B is what? B. Correct. Chale aage. Identify which of the following is not a feature of jointly controlled asset. Once again, not a feature. There is a separate legal identity. This is not. There is a common control over the joint asset. Yes. Expense of jointly held asset are shared by the venturer as per the contract. Yes. In their financial statement, ventures show only their share of asset and the total of income earned by them along with the total expenses incurred by them. Total expenses. One second. Ventures show only their share of asset, is correct, but total income and total expense. Total income not. Share of income and share of expense incurred by them. English is what? And the total income earned by them along with the total expense incurred by them. By them they have given now. Them means what? Venture. It is also correct only. What option is given? So option number A, correct. This is also correct because they have taken total income earned by them. Them means what? They say only. Total expense incurred by them. Them means what? Their own share. English, Baba, English. Don't be confused. Okay. So point number 1 is correct. They have given which option? 3 ka A. So point number A. Okay, chalo. Now point number 4. Identify which are features of jointly controlled entity. Venturer create a new entity. Yes, correct. All the venturer pool their resources under a new banner and this entity purchases its own asset, creates its own liability. Correct only. The revenue and expense of the entity is shared by the venturer in the ratio agreed upon the contractual agreement. The revenue and expense of the entity is shared by the venture. It is not shared. Correct now. The revenue and expense of the entity is shared by the venture in the ratio agreed upon the contractual agreement. Achha, they have asked what are the correct feature they have asked. This is also correct. Venturer create a new entity for their joint venture business. What they have given? Identify which are the feature of jointly controlled entity. Venturer created a new entity for their joint venture business. This is also correct. All the venturer pool their resources under a new banner and this entity purchase its own asset, create its own liability, expense and are incurred by an entity itself and sale. ये भी correct है? अरे all are correct ना? अच्छा, this is given point number 3. This is also point number 3. Both are point number 3 na? Some, I think there is some mistake. I think it should be none of the above. Answer C है. Point number 3 is, point number 1 is correct, point number 2 is correct, point number 3 the revenue expense of the entity is shared by the venturer in the ratio. This is also correct. Chalo, none of the above छोड़ दो. None of the above is correct. Okay, means all of the above na. None of the above not. All of the above. All the above should be correct na. None of the above. Is correct. इसको कर दो D. Okay sir. Now identify the correct statement. From the date of discontinuing the use of PCM method. Discontinuing the use of PCM method. If the interest in the entity is more than 50%, then AS 21. If the interest is 20% but less than 50, AS 23. For all the case of investment, AS 13. For the purpose, the fair value of investment at the date on which joint venture relation ceases to exist should be regarded as cost thereafter. Point number 1, 2, 3 is correct. What they have given? B. That's good. 1 is correct. Point number 1, 2, 3 is correct. This is not correct because we have not done this point. correct? So 1 2 3 is correct. Got this point? Yes sir. I hope MCQs always now can be dangerous because for that the full understanding required in the understanding of each content, correct? So MCQs may be this also in exam, may be a different type of MCQs. You need to retain all the points. Okay. Chalo, with this we completed this accounting standard. New accounting standard will do in next day. Okay. Chalega. Today you have test also na? Write on the test. Okay sir.